Good morning, everyone, and thank you for joining in. So we'll start from, I'll start it sometime. So we are just waiting for the members to join in. Good morning, Yogesh ji.
Morning, sir.
मैं आपको co-host बनाता हूँ.
No issues, sir. No issues.
Good morning, everyone. Thank you for joining in. Okay, so we see Raji ji after a long time.
Good morning, Anuj ji.
Good morning. Good morning, Raji sir.
गुड मॉर्निंग सर.
Good morning, sir. Good morning. राजेंद्र जी, आपको मैंने वो कर दिया co-host. ठीक. We'll wait for just 1 minute more and then we'll start with the introduction so that we can start the session from 9:01. और फिर कुछ लोग जोड़ते रहेंगे फिर. So good morning, everyone, and thank you for joining in today's Saturday morning session, which is being hosted by the GST faculty group. And it's lovely to see that all our family members have joined in here, and we are already there. So since today we have some core issues to discuss, and time is a restriction because each speaker has around 20 minutes of time to discuss. So maybe I will not intervene into the time. So I'll quickly go into the introduction of CA Yogesh Harjai ji. So, CA Yogesh Harjai is from Delhi. He is a qualified chartered accountant and also a law graduate. And he is a designated partner of Spark and Estates CALLP and is presently based out of Delhi. And he is also an empaneled faculty of the ICAI. He has over 1 decade of experience as a professional. And I've heard a lot of his sessions. I've attended a lot of his sessions. And I can vouch that he's a wonderful GST trainer and a consultant. And he's also regular in making representations before the various authorities, especially in terms of Delhi VAT, service tax, and also GST for assessment or otherwise. So today, now I would request Yogesh Harjai ji to take over the session from here. Yogesh ji, over to you.
Thank you, Arabji, for the introduction. And first of all, I would like to thank everyone for giving me this opportunity to deliberate in front of such a learned house, from whom I've been learning so much. And it's a pleasure to be speaking at this platform. And now, without taking much time, I would like to start our presentation. I hope my screen is visible.
Yes.
Yeah, discussion for today at my part is this regarding the circular 198 and 199 issued by CBIC on 17th of July. Now, let us first understand what are the basics. Circular 198 talks about e-invoicing matters. The e-invoicing, whether it will be applicable to services made to the government department, who are mainly registered for purpose of deducting TDS or not otherwise. And circular 199 talks about the taxability about the services, their ITC eligibility and valuation when the services are provided among distinct parties by HO to BO, by HO to multiple BOs, or even for that matter among BOs. So Circular 198, it's pretty simple on its part. It says that the government departments and government agencies who are registered under GST for the purpose of detecting TDS will be considered as a registered person for the purpose of Section 2, subsection 94. And therefore, if a person supplying any services to these departments, and if its turnover exceeds the threshold limit for generating e-invoice, will have to generate the e-invoice while making services to them. Now, why I say it's pretty simple, I guess the section in itself was very clear. If we talk about Section 2, subsection 94, which talks about the registered person. It says Section 2, subsection 94, registered persons are the persons who are registered under Section 25, other than the persons who have unique identification numbers. And when we go to Section 25, it says any persons who are liable to be registered under Section 22 and 24. And Section 24 makes it mandatory for a person who is liable to deduct TDS to get registered. So the chronology of the Act itself provides that any person who are registered under Section registered for the purpose of deducting TDS in Section 51 are required to get mandatorily registered and will have to follow the procedure under Section 25. And once they are registered under Section 25, they are automatically a registered person for the purpose of Section 2, subsection 94. So accordingly, these government departments and establishment agencies or the local authorities and PSUs who are registered for purpose of deducting TDS are registered person, and any supplies made to them will have to be made under the cover of e-invoices if the supplier, the turnover of the supplier exceeds the threshold limit for generating e-invoice. So I guess in this circular in itself, it's pretty much clarificatory, which I believe was already clear in terms of law by the chronology of the law. And I don't think if there's any issue in this circular, if there's any, you may ask, or we shall proceed with Circular 199, where there are a few things I need to discuss.
Yeah, Yogesh, I think we can move forward.
Now, Circular 199, let us just break it in two parts. First, the services that are being obtained or procured from a third party by the head office, and those services are not particularly related to head office. It may relate to a branch office also, or one or more branch offices, or exclusively for the purpose of branch offices. Now, in that case, what till now, what the process was to take the IST registration for the purpose of distributing that tax in respect of services that relates to the branch offices. If head office is collecting all the tax invoices against those services, the head office has to take a registration as ISD and then distribute that credit in the manner that has been prescribed. Now, alternatively, what Circular 199 says that instead of taking registration as ISD, head office can also issue tax invoice in respect of that portion to the branch office, and to that particular branch office, that respective branch office, who is ultimately the recipient of that service. And ITC will be available to both head office and the branch office. Although this circular in itself simplifies things, that we don't need to take another special registration as ISD registration for distributing of credit, but that leaves a scope of a couple of questions. Now, first question here comes to my mind is, can the head office be considered as a service provider in respect of all the services that are received from third party and are attributable to the branch offices? Let us just understand with this, with the help of example. Now, there is a company having its corporate officer in Delhi and have its three distinct factory locations. One is in Delhi at some other place, one say in Noida in UP, and another factory in Manesar, Haryana. Now, what head office does, they procure services of security agencies for all three factories. Now, the factory in Delhi, a little bit smaller one, and requires only 3 personnel to be present. A factory at Noida, a little larger factory, where they need 5 persons. And the factory at Manesar, it is a larger unit and may require up to 10 persons to be present for security purposes. Now, what the head office does, head office procures a single invoice against that services and makes payment from the respective branch offices. Branch offices are maintaining their accounts by themselves. Accounts of each branch offices are being drawn by them, and then they are reconciled for the purpose of balance sheet. Now, they make the payments for their respective services, which are obviously divided among the number of persons, because we get the invoice for security services with respect to a number of persons that is invited, and it's distributed in accordance with the number of persons that are assigned to every place. Now, in this example, is HO providing the security services? Can HO raise the invoice? Will it not fall under the category of issuing invoice without providing services, without making actual supplies, and then make me liable for penalty under section 122? Is it actually possible to issue invoice by office in this case? And another thing, what service HO is actually providing? Is it providing this security services, or it is merely providing the services of facilitating the procurement of such services for the branch offices, thereby entirely providing a different service to branch office, which again will be subject to cross charge? So, going by this circular, although this has eased little bit in terms of taking registration, but again, I believe we have to be very careful while deciding whether we have to take ISD registration or we have to issue a tax invoice, keeping in mind the facts and circumstances of each case, that can HO actually be considered as a service provider in respect of a particular service that has been obtained from third party and may be used by head office partly and partly by branch office and exclusively by the branch offices. So that question still remains open and open to discussion. I would really like to, even I would like to understand by the, with the discussion over to the group, that can it actually happen? Can HO be considered as a service provider and issue tax invoice? Will it not raise an issue going forward regarding the penalty under section 122? And can circular go beyond what is there by the law? The law does not provide the scheme to be going by this way. They have provided ISG specifically for this purpose. And by this circular, we are actually setting aside the law and making a new procedure for doing the same thing. Although it is beneficial and people may not actually take it in that way, that it is coming as a hindrance. But if we think deeply, then there is a little bit of problem in following this procedure that has been prescribed by this circular. And in addition to that, security services question will again come for the services that HO is actually providing, about facilitating or procurement of services, whether we have to issue invoice to the branch office for this particular services or not. And if yes, then how to calculate the value, the cost of this service. I just hope I'm able to make clear the confusion that I had while reading this circular. So if there's anything anyone want to add to this, I would really be grateful.
Yeah, I think Ramandeep ji is asking whether this will be considered as trading of services, basically. You know, like if you have taken the example of the security agencies. So if I take the example of an auditor, so can I actually provide the services of an auditor? So that is again another question.
So that is what we have to understand again, based on facts and circumstances of each case, what services are being taken and how they are being attributed to the respective branch offices. See, if we understand who is a service recipient as per law is a person who is liable to make the payment to the service provider. Now, in this case, although HO is procuring the invoices, but the payment are being made for respective branches in respect of their services. Because the quantum for each branch is different, because the number of persons assigned to that particular branch, that particular factory are different. So for once, in case if we make payment from the HO and make a contract in such a way, then we can still say that HO is actually a service recipient and providing the services to branch offices. In that case, we can still do through section 31 by issuing tax invoice. But there can be cases where it is practically not possible for HO to issue tax invoices where the branch offices are actually the direct recipient and also making payments. And what HO is doing is actually collecting the tax invoices because it's a collective tax invoice or a single invoice. And the service provider is not willing, maybe not willing to issue 3 different invoices for the one services that is providing. So he issue single invoice with the head office, and which head office then distributes the ITC. So far, HO is doing it through the medium of ISD. But going forward, HO has the option to register the registration taken an ISD, reduce his compliance burden, and then issue tax invoices.
So we have two more insights, a few more insights. Like Uniji is sharing that Uniji has a bad voice today, so that's why he can't speak. So he's saying that whether HOBO can use 16.2b explanation 2, and that bill to ship 2, that deemed recipient. That HO is the deemed recipient for the services provided.
But sir, that's again who is the recipient? Who is the recipient will have to be understood in terms of law. What if HO is not the actual recipient?
Right.
If HO is not the recipient, then that 16.2b proviso that also comes to no use. So that has to be understood in with facts and circumstances again of each and every case, that who is the actual service recipient. If HO comes out to be actual service recipient, then that process of issuing tax invoice under section 31, that is not a problem. But if not, then what is the solution? Can we still go ahead with section 31 and issue a tax invoice? I don't think so.
Yeah,
And
hi, this is Shiva Prasad. Can I?
please tell.
Yeah. So
Yes.
my thoughts on this are like, being an HO itself is a service, because HO is giving the management, direction, stewardship. So therefore, when the HO receives audit or insurance or some other kind of consultancy, architecture or something like other statutory clearances, etc., being an HO itself is a service, and because of the distinct person and Schedule 1 deemed supply concept, HO is legally bound to issue an invoice for the services that it is doing as an HO. Anyway, we have advanced rulings like Columbia Hospitals, etc. So which says that being an HO itself is a service, and under the distinct person, the HO is legally bound to issue tax invoice anyway. And I don't think the spirit of the circular is that if some audit service or security or say cyber security audit or insurance services are obtained by HO, they are not being given as it is to the branches, rather they are being given as an HO service to the branches. So it becomes an alternate mechanism for ISD. So ISD is expenditure side way to deal with the things, whereas cross charge is, we can call it as a cross charge. So cross charge or transfer pricing is a revenue way to deal. So therefore issuing tax invoice is absolutely correct, and rather it is mandatory, even otherwise, even without the circular. So in my opinion, the circular is not superseding what is there in the law, rather it is only supplementing. So those are my thoughts.
The question is, what would be the HSN of the invoice?
Yeah, then that is the next question. Naturally, to my knowledge, in my understanding, it should be something like managerial support or management service.
That has to be this way only. The HO, if we say HO is providing services, then it's not just restricted to security services or insurance services, or for that matter audit services, but it is the overall management coming as a composite supply, coming as a package from HO to branch offices.
True. There is no one-to-one. It is not like it is not a what you call back-to-back service provider, like it is taking audit and it is rendering audit to branches. It is taking insurance and rendering insurance to branches. It cannot happen that way. So it is like being in head office, it is doing the management service. And for management service,
basically what you're saying is stewardship, like controlling the entire function and doing the support services to them, right?
Yeah, exactly. By doing that, HO had anyway incurred these service, so they should be eligible as ITC.
No, so but the question again that comes to me is that where the branch offices are themselves paying the services which they are procuring, or which head office is helping them procuring. Now, head office is it not just that head office is just facilitating that procurement of services, and again for that portion the HO has to issue invoice to the branch office, as you said, like management services. But that particular services that is being hired from the third party, the actual recipient, again, we understand is branch office directly. HO has no real concern with that services. And the branch office is again paying the respective payment for the services they are receiving, for the amount of services they are receiving. And then HO, in respect of that particular services. And for example, on some specific audit or stock audit has to be done for a particular factory or for a particular branch. Then head office just arranges the person. Let us take one more example with this.
In the given
let us
example,
say,
there is
yeah. So, sir, actually, we have 1 minute left for the session. So, I think we have got some of the important insights, but we would also love to have the views of the other speakers also. So,
please.
I think Shiva Prasad, I think this is what you have said is, I think one of the views that is there. And as Gaurav ji, I think somebody has already shared that ISD is going to become mandatory. Arpit ji has shared that ISD is going to become mandatory. So we have to look at that aspect also going forward. So Yogesh ji, I think we'll offer a formal vote of thanks at the end of the session.
Just
if you want to round up in 1 minute, if you can,
Yeah, sure. I will just quickly talk about the second part of this circular about internally generated services.
Yeah.
Now, for the internally generated services, the circular says if the branch office is eligible for the full ITC of the services that are provided by HO, then irrespective of the value declared in the invoice, irrespective of the component of such service, whether considered or not, will be considered as a value, open market value, as per proviso to Rule 28, and will be considered a transaction value. Even if they have not issued an invoice, they will consider the value to be nil and will not take again any action, or any demand will not be raised against us. Now, this circular has been pretty, I believe, smartly drafted, because you see when they talk about the full ITC, they talk about employee cost as just an example of the entire component of such service. But when we come to the next part where the ITC is not eligible for the branch office, they are specifically talking about the employee cost not to be included for determining the value of cost. Now, what all costs can be incurred, or what are these internally generated services? Just a quick example. Now, when we apply a loan with the bank, and after a certain limit, the branch does not process that application. That application has to go to a regional office or a head office for further processing. And that head office then involves outside agencies, investigating agencies. Some may be verifying the premises of the person who has seeked the borrowings. And then some agency providing the credit rating. And can be multiple agencies outside third agencies. And when they give their go-ahead, the head office then asks the branch office to go ahead with the proposal and sanction the loan. Now, these are I believe, a perfect example of internally generated services where HO has processed the application on behalf of branch office. Now, in that case, when the recipient is eligible for full ITC, there is no problem whether you issue invoice or not issue invoice, or what components you consider or not consider. But when the branch office is not eligible for ITC, then there is an entire ecosystem of the business of this transaction that has to be considered for determining the value, and not just the employee cost. And that cost may be the cost of the third party involved in making the decision. And some minor cost may be the electricity that is being used in the head office, printing cost, mobile cost, internet cost, multiple small costs. More specifically, we go by the direct cost, then the third party that is involved in making the decisions. Now, in that case, only the employee cost is to be excluded, but rest other costs are still to be determined, and invoice is still required to be issued. So I don't think this part has actually helped anyone in determining what we do, what we not do, except they have deducted the employee cost, that too in a case where ITC is not eligible. But rest other costs still come to play, and still the invoice has to be issued, cross charge has to be done. And again, when branch office is not eligible to take the ITC, that tax actually becomes the cost of the company itself. By making services to themselves, they are making the cost of the tax portion that is involved. So that's it, sir. I believe I'm able to do it in time.
Perfectly, Yogesh ji. With the time, considering that we had taken some Q&A, it was wonderfully done in time only. So now we request you to hang on, because we'll have some questions more in the Q&A after all the four speakers have spoken.
Sure.
If possible. Yeah. Thank you, Yogesh. So, like, now we will go from north, we'll travel to east. Yeah. So now we'll quickly go to the east to and welcome Rajendra Chachan ji. Yeah. So Rajendra Chachan ji is practicing CA from the city of Patna, which is very close to the historical city of Patliputra. He's into practice since 2009, and he takes active interest in handling, litigations, indirect tax litigations. He is a wonderful trainer and has already trained a lot of government officials on GST and identity matters, and also professionals too. He is a regular faculty at Nasi in Patna and Ranchi since 2012, so since the time of central excise and service tax, and has experience of sharing knowledge on various areas of indirect taxation. And is also associated with state GST for training their officers. So with this brief introduction, due to paucity of time, I would request CA Rajendra Chachan ji to take it over. Rajendra ji, yeah, you can start the sharing.
Thank you. Thank you very much, sir, for providing me this opportunity.
Sir, your sharing is not. So you can share from the share screen button.
Yeah, just.
Gotcha.
Okay. So from my side, there are two circular which I am going to discuss. One is circular number 192 and 197. So first I am going to discuss circular number 192. That is regarding computation of interest on ITC reversal. There's some issue in.
Okay, so I'll share the thing. Stop sharing. I'll share the PPT. So you can stop sharing. I'll share the.
So we'll start with 197 first, sir.
Okay. Give me 1 minute. Yes. Yes, sir.
Okay.
Yeah.
So this circular provides clarification on GST refund. There are total 4 clarification in this particular circular. The first one is clarification in regard to refund of accumulated ITC based on GSTR 2B. So before 1st January 2022, what was the position? There was a circular 125 which allowed to claim refund in respect of invoices, even those invoices which are not reflected in GSTR 2A. Then circular number 135, which restricted to claim ITC as per those invoices which are reflected in GSTR 2A. 2A of the current period, 2A of the past period, and 2A of the subsequent period. But with effect from 1st January 2022, after insertion of section 16(2)AA and amendment in rule 36 sub-rule 4, ITC refund is only eligible if invoices are reflected in 2B. So what is its implication? So suppose I am filing a refund application for the month of April 2022. So I can claim refund only against those invoices which are reflected in April 2B or past tax period 2B. But if invoices are reflecting in subsequent period 2B, against those invoices, I am not able to claim refund. So that is the first issue, whether a refund can be denied on this ground that the invoices, even though reflecting, but it is reflecting in the subsequent period. So anybody wants to add on it? in my view, refund on this ground cannot be denied. So it is very interesting to look forward what type of challenges we have to see in this particular area. One more clarification in this regard. If refund claim from January 22 onwards has already been disposed of by the proper officer, the same shall not be reopened on the basis of this circular. So that was the first clarification in 197. The second clarification with regard to undertaking along with the refund application RFD 01. As we know, we have to file an undertaking. We have to file an undertaking along with the application for refund. This undertaking is in regard to compliance of section 16 2C and section 42 subsection 2. Section 42 subsection 2 has already been omitted, and there is an amendment in section 41. So now the undertaking only in respect of compliance of section 16 2C. So that is the clarification in regarding undertaking. The third clarification in this particular circular with regard to calculation of adjusted turnover as per rule 89 sub rule 4. With effect from 5th July 2022, an explanation was inserted in rule 89 sub rule 4, which talks about export turnover value. The export turnover value will be lower of FOB value reflecting in shipping bill or the value declared in the tax invoice. This circular provides a clarification regarding calculation of adjusted total turnover. We know adjusted total turnover includes both export turnover and domestic turnover. So while calculating adjusted total turnover, export turnover will be calculated on the same line as has been given in the explanation under rule 89 sub rule 4. That is the clarification number 3 in this particular circular. And the fourth and final clarification in this particular circular is in respect of rule number 90A sub rule 1. Rule 196A sub rule 1 says there is a time limit of export. In case of goods, the time limit is 3 months from the date of issue of invoice. And in case of service, payment received within 1 year from the date of issue of invoice. Otherwise, it will be treated as deemed supply and the person will be liable to pay tax along with interest. That is rule number 96A sub rule 1. Then another clarification has been given in circular number 125, which says if the export has been done even after 3 months, the officer should not insist upon first payment of tax and claim refund at a subsequent date. In such cases, the officer is required to give post facto approval. So that is a clarification which has already been given in circular number 125. Now, this circular clarifies if the exporter has made payment of tax and interest as per rule 96A sub rule 1, he can claim refund of tax, but not refund of interest. तो 96A में अगर पेमेंट कर दिया है तो वो रिफंड क्लेम कर सकता है, टैक्स का रिफंड क्लेम कर सकता है, बट इंटरेस्ट का नहीं. And the category under which he will file refund application, the category will be other category, because the excess payment category is only available for refund for those person who has paid excess tax through GSTR 3B. So that's all for circular number 197. The next circular is 192. Computation of interest on ITC reversal. Section 50, subsection 3. Calculation of interest amount liable to be paid under section 50, subsection 3 in respect of wrongly availed and utilized IGST credit. The circular clarifies, in case wrong availment of IGST credit, the balance of ITC in electronic credit ledger under heads IGST, CGST and SGST taken together has to be considered. Here is an example. So suppose I have taken excess IGST credit of rupees 3 lakhs, and there are 3 different cases. In case 1, the balance available in e-credit ledger under IGST head there is no balance, but under CGST and SGST head 2 lakh each, and the total balance available 4 lakhs. Because the excess ITC amount is 3 lakhs and available balance is 4 lakhs, then it is no interest liability will arise. Again, in case 2, the total available balance is 3 lakhs, although all these 3 lakhs is available under head SGST. Again, no interest liability. And in case 3, in each head 1 lakh balance is available, but the total balance is 3 lakhs, which is equivalent to excess ITC claimed. So in these 3 scenarios, no tax liability will arise. The tax liability will arise only in the case when the total available balance in the e-credit ledger is less than IGST credit, excess IGST credit availed. So suppose if the total balance available is rupees 2.5 lakhs and excess ITC claimed has been 3 lakhs. So for 50,000, we have to pay interest. Next slide. This clarification has come only for the IGST reversal of ITC. Going by the above logic, we can conclude that for reversal of CGST ITC, we can consider the balance of available in the CGST and IGST ledger. And in case of reversal of SGST balance, the balance of SGST and IGST ledger. So that's all for circular number 192. Thank you. Thank you.
Thank you, Rajendra ji, I think, for the sharing the changes that have come in terms of refund and interest. So I think, but we'll take all the Q&A at the end because we are going as per time till now. So I think we would like to maintain that momentum. So Rajendra sir, we'll request you to kindly be with us, for
Yes,
another 2 speakers to end, and then we'll take all the Q&A together.
Okay.
Thank you, sir. So now I will, from north, we went to east, and from east, now we'll go to west. So now we'll have the pleasure of inviting our young and dynamic CA Jigar Parikh ji from Baroda. So he's a practicing CA from the city of Baroda, which is very close to the Statue of Unity. So we sometimes want to go to his place to see that. So he's into practice since 2013, which is about decade. He heads indirect tax practice in his firm, HJP and Estates LLP, which is based out of Baroda. Prior to joining his firm, he has already worked with 2 of the leading firms, BSR and Company and BDO Consulting Private Limited, in the indirect tax forum. He is also a regular speaker at various forums in the fields of GST. And when he's not working on GST, he happens to go out on bird photography and cycling. So, Jigarji, over to you.
Okay, I'm sharing my screen, sir.
Yeah.
Okay, so we'll be deliberating on 2 circulars, which is circular number 194 and 195. To begin with, we'll start with 194, which has been issued for the purpose of clarifying a scenario whereby more than one e-commerce operators are being involved in a particular e-commerce transactions, and how the TCS implications should be met with for the purpose of compliance with respect to section 52. So if we see this particular table, the first scenario is a consumer placing an order over the e-commerce operator. At the back end, the goods would be supplied by the supplier, and the intermediary, being an e-commerce operator, will obviously be taking care of the compliances. However, with the advent of digital commerce networking, there is a concept called open network digital commerce. If you can read at the bottom of the slide, in case the open network digital commerce or the similar arrangement, there can be multiple e-commerce involved in a single transactions, one providing interface to the buyer and the other providing interface to the supplier, which is the seller. So in layman's language, if I say if I have to place an order on the Amazon, I would first click on Amazon website, which may be for the purpose of my transaction being a buyer's interface. Backend, the Amazon will connect with another e-commerce operator, let's say Myntra, just for the sake of understanding. And in turn, Myntra will place an order to the Peter England for the purpose of buying a formal shirt for me. So Amazon being a buyer side e-commerce and Myntra being sellers, that is the supplier side e-commerce. There are two e-commerce entity being involved when we are talking for this particular transactions. So in this regard, there was a confusion how particular TCS applicability and the discharge of liability should be made with respect to Section 52. So with this circular, the department has clarified that when there are multiple e-commerce operator with respect to this particular transaction, the buyer's side interface, which is the Amazon for the purpose of our example, they will collect money from me, because I will make the payment as a part of my consideration in lieu of a formal shirt. They will deduct their commission and remit money to the seller's side e-commerce interface, that is the Myntra. Myntra in turn will comply with the provisions of TCS. They will deduct their own commission and remit the net balance to the ultimate supplier, which is the Peter England. So this is where the government has clarified that when multiple entities are involved with respect to an e-commerce transaction in a single transaction, in that case, the supplier side's interface being an e-commerce operator who is actually making payment to the supplier will be a person required to comply with the provision of Section 52 for the purpose of GST, whereby the applicable cash will be reflected once the returns are filed under by virtue of compliance of Section 52. So this was basically this circular number 194 precisely deals with. It also says that in case of transaction number 1, when the supplier himself is an e-commerce operator as well, so in that case, that transaction may not qualify for purpose of Section 52. However, if the supplier and there is a supplier's interface e-commerce, the TCS compliances will be done as per routinely what we have been doing so far. Moving to the next circular with respect to warranties by virtue of pre-replacement of parts or providing repair services, there are various scenarios which has been enumerated in that particular circular. I will just compile and summarize those things. Going by the very first scenario, what the circular envisages is that the replacement of goods are made by the manufacturer directly to the consumer during the warranty period, where no separately consideration is being charged by the manufacturer to the customer or the buyer, as the case may be. In that case, there will not be any implication of reversal of input tax credit, as well as no GST will be required to be paid. The reason which is being provided in the circular, which states that when the original supply took place, at that point in time, the likely cost of the said future replacement or the repair services would have been included in that particular original supply value, wherein the subsequent free replacement of that particular part, or as the case will be repair services, may not be should not be subjected to GST. The second scenario, they are saying that it's not always the manufacturer and the customer. There may be a scenario where there would be an authorized distributor of the manufacturer who are executing the trade on behalf of the manufacturers on a P2P basis. So in this case, when a customer approaches to a distributor for the purpose of replacement of the goods, or as the case may be repair of service during the tenure of ongoing warranty which is in force, in that case also, the distributor who is replacing the part on behalf of the manufacturer will not be required to collect the consideration. If he is not collecting, then there is no requirement of making payment of GST, as well as there is no requirement of reversal of input tax credit as well. However, the circular goes on saying that if the consideration is charged from the buyer, the distributor will be required to issue a tax invoice and comply accordingly to the provisions of the law. The third scenario they are providing is that the replacement of goods or repair of service provided by the distributor on behalf of the manufacturer, whereby the distributor is charging to the manufacturer and the parts are being offered to the customer or the buyer. In that case, the distributor will be required to issue a tax invoice in the favor of manufacturer, and the manufacturer will be entitled to the input tax credit subject to provision of Section 17, subsection 5. The fourth scenario, which is being envisaged in circular number 195, which deals with that at times when distributor is procuring the stocks may include the actual parts which may be required to be replaced in future. So at one point in time, when a customer walks in for the purpose of replacement of the parts, the distributor on his own, based on the stocks which has been available with him, he will be replacing that particular part, collecting the defective part from the buyer, and in turn will be handing over the same defective part to the manufacturer. So in this, the circular has been providing for a clarification that when the defective parts are being returned to the manufacturer will be required to issue a credit note by adjusting the liability accordingly, and the distributor will be required to the reverse pro rata input tax credit in this regard. However, there is a small asterisk which is being marked in this particular table, which is in reference to a discussion we wish to make with respect to a recently pronounced Honorable Supreme Court decision in respect of Tata Motors, which has once again upheld the decision in case of Mohammad Ikram Khan, wherein under the erstwhile VAT laws, they have said that when the defective parts are being replaced by the distributor to the manufacturer, the credit note which is being given by the distributor in form of a the credit note which is being issued by the manufacturer in the running account of a distributor is nothing but a value of a consideration in form of a price equal to the credit note, whereby Honorable Supreme Court has upheld that the distributor will be required to pay VAT under the erstwhile law. So, considering this circular, which is absolutely in contradictory with the judgment of recently pronounced by Honorable Supreme Court, which has once again reaffirmed the 2004 judgment of Mohammad Ikram Khan, we are likely to see a differential treatment, although the circular is providing for issuance of a credit note and the distributor requiring to reverse the input tax credit. This also leads to just a question for the purpose of discussion that in case of financial credit note, when a credit is being given in the running ledger of a distributor or as the case may be a buyer, will department once again state that considering the provisions of, considering the decisions of Honorable Court, Supreme Court, which says that a credit note in favor of the distributor will tantamount to a price on which otherwise the taxpayer, which being a distributor, is required to make payment of GST. Although the judgment has been rendered in the context of VAT laws, whereby the definition of sale was there in force, but the supply connotes a much wider meaning than the meaning which was being assigned in terms of sale with respect to Sale of Goods Act. So this is where one discussion that is going to pop up in time to come with respect to at various forums with respect to a transaction, especially in the automobile sector and the engineering sectors. Moving further, where there is a scenario where they say that the distributor is providing repair services under a warranty on behalf of the manufacturers, and he is charging consideration to the manufacturer, then the distributor will be required to charge GST on the tax invoice to be issued in favor of manufacturer, and the manufacturer will be entitled for the purpose of input tax credit. So this scenario is put at par with those scenarios wherein the goods are being given to the customer on behalf of the manufacturer, and the distributor is charging a tax, charging the consideration to the manufacturer. So these are the different scenarios which has been envisaged in this particular circular with respect to replacement of parts, or as the case may be, repair services during the warranty tenure. This circular also deals with a warranty whereby with the ongoing trend, many of the company are providing extended warranty along with the original supply itself, whereby the customer chooses to opt for the extended warranty at the same time of transaction when they are agreeing for the original supply. So the circular goes on clarifying that the additional consideration received towards the extended warranty, which is being agreed at the time of original supply, it forms part of the value of the composite supply itself. And the principal supply being goods, the GST payable will be accordingly to the rate applicable to the goods only. However, it also distinguishes that once the extended warranty is being obtained by the customer subsequent to the completion of the original supply, but maybe within the normal warranty period, or he's buying add-on with respect to his product. In that case, the government has clarified that since this classifies to be an independent transaction, it is to be classified separately, and depending on the nature of warranty which is being offered in the nature of goods or service, or as the case may be, the applicable HSN or as the case may be HSC to be determined, and accordingly the rate of tax to be charged. So in nutshell, they are saying that once the warranty is taken at the time of supply, it will be part of the main supply. But if it is exercised subsequently, we need to treat that transaction as an independent transaction for the purpose of determining the taxability. So this is what 2 Circular 194 and 195 deals with respect to the clarifications issued for the purpose of relaxation in the trade. That's from my side, Arup bhai. Thank you so much for this amazing opportunity.
Thank you, Jigarji. I think it was really wonderful that you have included the discussions on the judgments also. So, but you'll have to wait with us because we have some questions. Akashji has asked a question, so we'll take that in the Q&A after Arjunji is done in this session. So, thank you very much for taking out time and deliberating on this issue and preparing this presentation. So, yeah, now we'll finally go to South, and we have another young professional waiting for us. So Arjunan S, we call him Arjun. So Arjun is he's a chartered from Kochi, from the wonderful city of Kochi. He's a chartered accountant and he's pursuing LLB. He's a partner at HNA and Company, which is earlier known as Hiranjan Estates, and currently heading the Kochi branch of the firm. His core competencies have been in the area of GST, FTP, and customs. He has practical experience in implementation of UAE VAT in many industries like construction, hospitality, manufacturing. He is also an avid author. He's written a booklet on beneficial schemes under FTP 2015 to 20. He has also assisted and contributed in the book of Handbook on GST Audit, which is published by another reputed organization, Karnataka State Chartered Accountant Association. And he has also contributed to sectoral book of the firm, GST on textile industries. So with this brief introduction, I would request Arjunji to take over the deliberation from here.
Yes, thank you, sir, for your warm introduction. Hope my screen is visible.
Yeah.
Good morning, all. So, in my deliberation, we will be covering the clarification provided by the revenue wide two circulars, Circular 193 and 196. First, we will proceed with Circular 193. So, as a caveat, I just want to provide my submissions that even though the subject of the Circular 193 states that it is a clarification with regard to difference in input tax credit declared in GSTR 3B and ITC reflecting in GSTR 2A, if we go through the contents of the circular, either Circular 193 or Circular 193, the contents of the circular seems to provide a verification mechanism for satisfying the condition provided under Section 16 subsection 16 subsection 2 clause C. So I have kept the title of the slide as a procedure to clarification relating to verification of condition under Section 16(2)(c). So Circular 193 in upfront provides reference to Circular 183, wherein it says Circular 183 has conferred certain relaxation or benefit in relation to financial year 17-18 and 18-19 in relation to 4 scenarios, wherein the supplier has not filed GSTR1 but filed GSTR 3B, where the supplier has filed GSTR1 but has not included the invoice pertaining to the customer, but he has paid the tax through GSTR 3B. The third scenario, he has included the invoice pertaining to the recipient in his GSTR1, but erroneously classified the transaction as B2C instead of B2B. The fourth scenario, yes, the supplier has included the invoice in his GSTR1. However, erroneously, he has disclosed a different GSTN instead of the actual GSTIN of the recipient. In these 4 scenarios, for the purpose of verifying the satisfaction of the condition, whether the tax has been actually paid to the government, the circular has provided a mechanism wherein it requested the registered person to provide certain certificates for a financial year based on certain monetary limit, which is 5 lakhs per financial year. If it is less than 5 lakhs for each supplier, a certificate from supplier itself enough. for the purpose of satisfying the condition of 16(2)(c). In case the difference per supplier exceeds 5 lakhs, then there is a requirement of a certificate from chartered accountant or cost accountant of the such supplier. Now, Circular 193 says that the same benefit of 183 is going to be conferred for the period starting from April 2019 to December 2021, but with certain modifications based on the updated law during such subsequent period of implementation of GST law. So as we all know, Rule 36(4), which insisted upon reconciliation between GSTR 2A and 3B, was introduced prospectively from 9th October 2019. So even in this Circular 193 acknowledges the same, and it says that for the period 1/4/2019 to 8th October 2019, so for the practical purpose, we will restrict the period only till 30th September 2019. This conditions or the procedure provided in Circular in 183 in toto shall apply even for the period April 2019 to September 2019. However, with effect from implementation of Rule 36(4), the circular intends to provide that the condition of section 16(2)(c) has to be read in conjoined with Rule 36(4). So, I shall not provide any input tax credit in excess of the limit provided under Rule 36(4), even if you provide this certificate. So the circular confines the benefit of submission of the certificates from either the supplier or his chartered accountant. So Circular 193 states that requisite certificate. Requisite certificate means certificate mentioned in Circular 183. Whether it is provided by supplier or his chartered accountant, both are termed as to be a certificate in Circular 183. So there is no confusion of the phrase requisite certificate. However, the Circular 193 says that I shall confer the benefit of provision of or submission of this certificate only for the ad hoc input tax credit which has been availed via Rule 36 Sub-Rule 4, wherein Rule 36 Sub-Rule 4 says that you can avail the input tax credit to an extent of reflection of such transaction in your GSTR 2A. However, there can be an ad hoc availment of either 20% or 10% or 5%. In addition to the eligible input tax credit reflected in 2A, you can avail its respective periods. And the periods has been listed down in this table. I am not explaining each period and the threshold limit. I am taking the assumption of awareness of such condition for the respective periods. So the circular says that the certificate under 193 for the period 9th October 2019 to December 2021, submission of certificate as mentioned in Circular 183 shall save the input tax credit only for the ad hoc availment in terms of Rule 36(4). It is not as same as Circular 183 for the period 1718 and 1819 and the extended period of April 2019 to September 2019, wherein it says wherever the credit is not reflected in 2A at all, you can get this certificate from the supplier or his chartered accountant, and the entire credit, even though if it is not reflecting in 2A, based upon the certificate submitted by the registered person, the proper officer shall allow the input tax credit and the same shall not be denied. By going through the contents of the circular, there are certain ambiguities inbuilt in the language of the circular and also certain legal infirmities which are there to be discussed. So moving on to the ambiguity or important points which we should discuss on the language used in the circular is that in Circular 183, the requirement of submission of the certificate was provided for financial year basis. Whereas by going through the para 6 of the circular, where para 6 confines the cumulative benefit of compliance of Rule 36(4) only for the COVID period, that is February 2020 to August 2020, February 2020 to August 2020. So since they have specifically provided benefit only for that certain period, so the circular indirectly says that the compliance of Rule 36(4) has to be made tax period wise, and the certificate from the supplier or his chartered accountant has to be issued or received on tax period basis, which is understood as monthly. Even though the definition of tax period says that the period for which a return is being filed, so return under section 39 is filed monthly, annual return is filed annually. However, the availment of input tax credit is restricted only with the monthly returns. So the conjoined reading of those provisions gives us an inference that the circular specifically says that such certificates should be issued for each tax period, not for financial year as earlier provided under Circular 183. The second thing, so wherever the departmental officers had issued a notice for difference between 2A and 3B on an entire financial year basis, not on tax period basis, now the ambiguity comes how the department is going to implement this circular. Are they going to adjudicate, even though the show cause notice does not specifically provide for each tax period, but while adjudicating or during the appellate proceedings, by issuance of this circular, do the department is going to require a monthly submission of certificate is yet to be seen. We need to wait how the department is going to implement the provisions of this circular. The second ambiguity is that it is a weird paragraph which I have noted in the circular, wherein the circular itself says the circular is a clarificatory nature and it shall apply for each facts and circumstance of each cases. However, this circular cannot be used for interpreting the provisions of the law. So it's a weird para. I have not read in any of the circular which I have gone through in my knowledge. Normally, we shall go through the circular to understand the intention of the department or their way of implementation of provisions of the law. It is very much clear that circular cannot supplant the law. It can only clarify or supplement the law. And even the GST circular, the earlier circular 135 has clarified the same. So what was the requirement to insert such a bizarre para in the circular itself? So does the department themselves feels that, okay, this circular is intended for some other purpose to uphold the validity of certain provisions which has been already challenged by the industry? Is yet to see how the industry is going to, or how our professional forum is going to interpret para 7 of this circular. Moving from the specific ambiguity or important points in reference to circular, I would like to put across certain legal sanctity in relation to this circular. So the circular 193 tries to mention that Rule 36(4), which was introduced on a prospective effect, is a procedure for the purpose of fulfilling the conditions of section 16(2)(c). This is what the circular is trying to say, because it is allowing the credit even upon submission of certificate from the supplier, which says that he has already paid the tax, only to the extent of the ad hoc availment, the 20% and 10% and 5%. So does the revenue feels that 16(2)(c) and 36(4) has to be read conjointly. So even if the supplier gives his declaration that he has paid the tax, but he has not shown in GSTR 1, based on the 4 scenarios which we have discussed in Circular 183, even after getting such declaration or certificate, whether the department is going to deny the credit just because the circular says 36(4) restricts only to the additional 20% is a matter of challenge. Now we need to see what is the purpose of Rule 36(4). Rule 36(4), even though it is challenged that there is no parent section which provides powers to the government to introduce such rule. Section 16, subsection 1, which says input tax credit shall be availed by the person subject to certain conditions and restrictions as may be prescribed. So even if we consider Rule 36(4), just for assuming, or also based upon the principles ruled by Supreme Court in the case of VKC judgment, wherein it says, as long as the framework of the rules are does not transgress with the matrix of the provision or the intention of the law, such rule can never be treated to be ultra vires as long as section 164 provides the powers to frame the rules. So even considering these two principles, assuming 36(4) is a valid rule, it has to be a rule issued under either 16(1) or sections 164. So the rule is just a procedural mechanism to ensure the interest of revenue, and rule 36(4) per se does not satisfy the condition of section 16(2)(c), because 16(2)(c) talks about the actual payment of tax to the government, whereas 36(4) talks about disclosure in GSTR1 by the supplier. So the rule 36(4) has to be construed only for procedural purpose. So herein the play of the earlier settled legal precedents that procedural lapse cannot deny the substantial benefit, that rationale has to be enshrined here. So even if it is not reflecting in 2A, if I am able to get a certificate from my supplier that based on the 4 scenarios of Circular 183, there was an inadvertent error from the side of the supplier on disclosure in GSTR1. However, the certain tax has been already paid with the government based on that certificate. Considering section 155 of CGST Act also, the department is bound to give credit. They cannot deny the credit based upon section 16(2)(c), because the circular in its subject, both 183 and 193, it talks about verification of satisfaction of condition under 16(2)(c), not for rule 36(4), even though the subject talks about difference between 2A and 3B. Now, even if the validity without prejudicing to the submissions or the contentions, whereas we are challenging the validity of circular rule 36(4) or considering it only to be a procedural rule, this circular tries to provide an additional condition beyond the act and the rules. So the rule itself provides the entitlement to the registered person to avail the additional input tax credit to the extent of 20% without any condition to be fulfilled upon. So now the circular comes and says,
sorry to interrupt, 5 minutes, please.
Sure, sir.
Correct.
So, okay, the circular comes into play and say that even the rule allows you to avail the additional input tax credit. Unless you provide a certificate, I will not allow the credit. So this could be another point to challenge the validity of the circular. Moreover, the Karnataka High Court in the case of Wipro, in its judgment, it has said that the scenarios prescribed in 183 clearly shows that the department wants to allow the input tax credit despite the inadvertent error, bona fide error of the supplier, wherein he has not disclosed in GSTR1. So it has to be extended even for financial year 1920. Why can't the circular 193 also could have taken the jurisprudence from the High Court, a decision of the Karnataka High Court, and could have actually conferred the benefit to the industry? Presently, even though the circular tends to or communicates in a way that it is a benefit conferred to the assessee for the subsequent period, the actual contents in that circular, or after reading the wordings in the circular, it doesn't seem to be an benefit conferred, but an additional responsibility to safeguard the credit already availed as per the rules. Even if I have not availed, challenging the provisions of Rule 36(4), this circular implements certain additional procedure for the purpose of availing the credit taken based on Rule 36(4). Validity of section 16(2)(c), yes, it is being constitutionally challenged on its constitutional validity, and it is pending before several high courts. An important judgment which we can look into is Madras High Court judgment in the case of Pinstar Automobiles, wherein the validity of section 16(2) was not vehemently recorded in the judgment. However, the judge has clearly mentioned that 16(2)(c) has to be strictly read and it cannot be treated as invalid provision. 16(2)(c) comes based on the assimilated wisdom of the department based upon the past facts to ensure the interest of revenue. So when the 16(2)(c) is valid and it is there in the law, unless it is constitutionally struck down based on its constitutional validity, it has to be followed, and it is a protective liability cast on the recipient to reverse the input tax credit and substantial liability on the supplier. The court specifically instructed the department stating that there has to be a specific procedure to allow the recipient to re-avail the credit upon recovery from the supplier. And recently in Finance Act, Section 41 was amended, and the Rule 37A has been introduced specifically for the 16(2)(c). So it is very much interesting to go and see. And the Circular 193 does not provide any clarification or a dispute resolution to the present scenario. It actually adds up oil to the pan to increase the fire. So we need to see how the officers are going to implement this circular. And even the e-com bill coffee trading would be actually in favor of the assessee. So as long as I have proved my genuineness of the transaction along with all the substantiating documents, the credit should be allowed to me. They cannot deny the credit. Just an additional small circular, which is actually a benefit for those assessees who have already got a show cause notice based upon the frivolous show cause notice issued by the Karnataka State Department on holding of shares by holding company in subsidiary company. So just because the circular clarifies that, it clarifies the settled jurisprudence. Just because there is an entry in the notification or in the scheme of classification, which is an annexure to notification 11/2017, that per se doesn't prove, or that per se doesn't substantiate the existence of levy. Section 7 clearly depicts the condition that there has to be a supply of goods or services for a consideration made by a person in the course of furtherance of his business, unless the supply is being proven by the department, which is their responsibility. Unless they demonstrate how there has been an actual supply of service by the holding company to the subsidiary company, mere holding of shares in subsidiary company is not a supply of service at all. It is just a right of the ownership held by the holding company. So it is not liable to be taxed under GST at all, just because of that rate entry. But if the department identifies, so based on the facts, the department got certain details or any special unique information or data relating to a case stating that holding company has actually provided certain services by holding these shares, that I am not aware what could be the services. So the forum can throw light upon that. So if they find out certain specific information or facts, they can still allegate the levy of GST. So with this, I rest my deliberation on both the circular 193 and 186, and I leave the deliberation with the forum to have a fruitful discussion or any queries in relation to my deliberation. Thank you all. Thank you,
Arjunji. Thank you so much for the wonderful deliberation.
GST, yes, sir. Thank you, GST faculty group, for providing me this wonderful opportunity. Sir. Thank you.
Thanks to you for completing on time. So now I would request CA Dr. Arpit Haldia ji to first offer a vote of thanks to all four of our speakers. Then CA Venugopal Gela, Venuji and Arpit ji will be having the Q&A session today. And Unni ji was also supposed to add in, but due to his voice issue, maybe he will not be adding through his voice, maybe through writing. So Arpit ji, over to you.
Thank you, Arupji. And
Arjun ji, you have to stop sharing. Yeah, thank you.
thank you, Arupji. And it was really a wonderful deliberation by all the four speakers. And it was really a challenge it would have been really a challenge for them to compile all the circulars in just a short span of time of 90 minutes. Given the fact that each of them have a vast and in-depth knowledge. So it is very difficult for a speaker for having the knowledge, but still not able to deliberate upon it in detail, because whenever a speaker comes on the platform, he wants to share each and everything with the participant. And the biggest challenge is not about deliberation on the subject. The biggest challenge is where to hold and where to deliver. So it was a challenge for all the four speakers, and all of them had done a great job. Be it Yogesh Harjai ji, Rajendra Chachan ji, Jigar, and Arjun ji, because all the circulars were covering the issues which were being faced by the industry in detail, and they have done a very commendable job and ignited the thoughts. Like in the first session, Yogesh ji was deliberating upon the ISG and cross charge, and we have to come in between and stop them. Otherwise, it was a discussion worth having, that how a head office can be considered as a service provider, or they only have to pass on the ITC through ISG, and deliberation of Arjunji on circular number 193, Jigar on warranty, and Rajesh on the refund part. It was a great session by all four of them, and kudos to all four of them for taking part and deliberating on the subject.
Thank you, Arpitji. So now we go to the most important part of the second important part of the session, that is the Q&A. So we have a lot of questions that are there in the chat box. So now over to Arpitji and Venuji.
Yeah, thank you, Robert. Firstly, I would request all the speakers to be back on the stage so that they can take up the questions. And there were some of the questions that would have been taken, missed, or would have lost. I would be coming from the beginning, whatever the questions that were there. Friends, as Arpit said, it is challenging for the speakers to hold within the time. We are also looking at how we can condense and do it. Like going forward, we will make sure the session ends at that time, but the Q&A can take on a little more time. Yeah. To start with, the question that I could see is, prior to issue of Circular 183 by Praveen Kumar, on ASMT 10 was issued for financial year 17-18, 19-19. Invoice did not appear in 2A. However, the officer allowed the credit based on invoice copies and the payment made. ASMT 12 was issued. So, like, you're lucky. Currently, the client is subject to inspection under 67, and the authorities have picked the 2A versus 3B mismatch. Can the inspecting authorities pick 2A versus 3B mismatch again for the years for which ASMT 12 is issued? So now here the question is on the jurisdiction of 67. We are now traveling beyond the circulars matter. Second, if yes, the inspecting authorities now ask CA certificate of 183 for closed issues, as 183 says that it would not yet apply for completed proceedings. So the question is by Praveen Kumar.
Sir,
Yes, sir. Yes.
So for the answer for the first question, sir, on the jurisdiction of has to start your, yeah. So for the first query, whether they have jurisdiction to raise the issue of difference between 2 years and 3B under the guise of section 67, that since an assessment has been already completed by issuance of ASMT 10, where they have allowed the credit and the information is already available with the department, they have knowledge of the same. I don't think that section 67 can be raised, because there has to be an intention to evade tax. There has to be a contravention in the provisions of the law, and has claimed the input tax credit beyond his entitlement with an intention to evade tax. When he has already proven his bona fide belief or bona fide compliance, and which has been backed up by Circular 183, the jurisdiction of 67 can be questioned. And even assuming that 67 can be allowed, Circular 183 says ongoing proceedings. It does not talks if it is completed and then reinitiated and all those things. If it is an ongoing proceedings, which includes scrutiny, assessment, audit, investigation, etc. So even proceedings under section 67 can be considered as an ongoing proceedings. Even there, Circular 183, the benefit by providing the certificate can be considered. But therein, we can say that there is no point to raise the proceeding under section 67, because I have complied with the law.
Oh, there's one more question for you, Arjun. Can the payment be done through DRC 03? Can it be considered by the Circular 193 read with 183? What if the supplier had filed nil GSTR 3B?
Yes, sir. That scenario is specifically not covered in that circular, because in circular, all the 4 scenarios, it has assumed or considered that the taxable person has paid the tax in GSTR 3B. So it is not a scenario covered under circular on strict reading. However, based upon the Karnataka High Court judgment and also proving the burden of proof under section 155, we can say that circular is only a clarificatory in nature, and even all the errors made by the suppliers on a bona fide belief or bona fide inadvertent error, such benefit should be extended. And we can also always raise the issue that once the supplier has paid the tax, when you have recovered the tax from my supplier along with interest and penalty, the credit of the same cannot be required to be reversed from the recipient's end. That Supreme Court decision is also there, and recent section 41 subsection 2 also allows me to re-avail the credit. So based on this, even if the tax is paid through DRC 03 by supplier, input tax credit should not be denied in the hands of recipient.
So one more point from the circular 193, where you briefly touched upon the COVID benefit of cumulatively looking at the thing. Can that be extended for the non-COVID period? Assuming if the supplier was taking, it was like now the concept of temporary and permanent reversal scheme now. Assuming the taxpayer was taking credits on which was there in the books, and extended credits were there in the subsequent period. So can they merge and look at the eligibility of credits which have been taken beyond the 2B?
Sir, based on the circular, the answer would be negative. But however, on the legal understanding,
the circular was silent on that part.
No, there is one more principle, no, sir. When the law provides for a specific scenario, that means it does not cover the other scenario. So they have specifically allowed the cumulative period, and they use the word tax period for all other periods. So tax period could be inferred as monthly return, because in annual return, I will not avail the input tax credit. I am just disclosing the credit availed in 3B. So the department will always assume that 36(4) has to be complied on tax period basis, even though the rule does not say so. However, circular 123 and the circular 193 talks about this tax specific period. So the department will always try to implement on monthly basis. However, I am of the view it can be extended for financial year basis, and I am considering 36(4) only a procedural condition. If I can able to prove that tax has been already paid to the government by the supplier, either by getting his certificate or his chartered accountant certificate, I should not be barred from availing the credit, even after considering 16(2)(c) and section 155, based on the decision of Ecom Gill and the Onquest Merchandising Private Limited. Both the Supreme Court actually provides favorable judgment to the assessee to avail the credit, irrespective of reflection in 2A.
Arpit bhai, there was a mention by Nilesh saying that we should have a little more detailed discussion on cross-charge versus ISD, and others also feel that this need only that aspect would need an extensive deliberation. Though we have given a very less time for the first speaker to discuss on this subject. Yeah, your views on that?
Yeah, Venuji, what I feel that today's session is only an appetizer, and the complete menu is will be provided in future. So we will be definitely coming on the ISD and cross-charge session. And one thing I would like to add on the ASMD 10 part, wherein proceedings have been concluded by ASMD 12. In my opinion, if an order has been passed, then the provision of section 108 also needs to be considered, that in inspection, they don't have the power to reopen the proceedings, only 108 allows them. So this is one additional ground that can be taken if the proceedings are sought to be reopened.
Yeah.
And in my opinion, now we should move ahead with the questions on some other topic, and we will take the questions in detail whenever we hold the sessions on the relevant circular.
Right. So participants, now you have any questions? Whatever which are there in the chats in between were addressed by the speakers, and what others I have picked up. Any questions that we need to take it up? Anyone wants to say anything? Unni is asking about 96A, interest on refund. Unni, maybe it is too cryptic for me to decrypt.
One thing I would like to add to the interest circular, that is for IGST and CGST and SGST. In my opinion, why they have only issued a circular on IGST? Because the IGST part is used first, and then only there is a C and S part left. So there would not be any situation post 1st April 2019 wherein there would be a balance in C and I first I would be used and then only there would be a utilization of C. Prior to 1st April 2019, yes, there would be a situation, and this circular does not covers that period. And in my opinion, as Rajesh ji rightly said, so for the period prior to that, although this circular does not cover, but then we can use the principle of that this circular for a period up to 31st March 2019.
Okay. So maybe I think Unni is asking, is it right for the department to levy interest where 96A violation happened, like LUT done, but exports made after 3 months or service realization after 1 year, though refund is provided, but would they be justified in asking interest? I think that's the question maybe.
Sir, I suppose the question is, why is the interest not being refunded in 96A, sir? Because the circular says refund will be given of the tax alone and not of the interest.
Rajesh ji, if you are there, you can, you would like to, if you would like to take the query.
Yeah, I think 96A is a procedural condition. Are you getting my voice, sir?
Yeah.
I think 96A is a procedural condition, and when the ultimate outcome is zero rated supply, there is no deemed supply in, so there is no reason why the interest should not be refunded.
The question raised by Unni ji is whether at all interest should be levied or not.
Pardon?
Whether at all interest should be levied or not. Refunding, yes, that is something to be challenged, that whether at all interest will be refunded or not. Whether at first point interest cannot can at all be levied, because what is there that whenever I make a supply on forward charge basis, I collect tax from the customer and then have to deposit it. In this case, I am depositing the interest from my own pocket, wherein I am exporting against IGST. So why at all there is a question of levy of interest?
Of course, when the export has not taken place, then the on the concept of deemed supply, both tax and interest should be levied, as per my view.
Okay. There's one more question from Praveen. I don't know whether he is talking about 183 and 193, or I was thinking that it should be part of 192, but whatever. The question is this way. Now it is not on the input tax credit. Assuming my IGST liability is discharged erroneously as CGST, SGST, and can the 183 be used for saying that said invoice is not filed or wrongly filed?
Sir, can I repeat my question, sir?
Yeah, please.
Yeah, so the question is, now when the supplier has filed an IGST invoice as CGST and SGST, it is appearing in 2A. So now can this circular 183 be used where the credit is appearing not as IGST but as CGST and SGST?
Okay.
So can it be told that?
No. One point which I would like to highlight and correct. Okay, if you are talking from the input tax credit from the recipient perspective, this grossly would become an ineligible credit. The moment when IGST is changed as CGST, SGST, it would automatically become an ineligible credit because the place of supply would change.
Sir, the invoice contains the correct tax, sir. Only reporting in GSTR1 is done incorrectly.
Agreed. So the moment the credit that has come into 2B as an it would show up as an ineligible credit.
Correct.
So till it is rectified back, your 20% rule is only for the eligible credit.
Sir, I'm basically asking about can it be treated as that this particular invoice is not filed in GSTR1 at all, since it is wrongly filed, and accordingly a certificate can be obtained that the due taxes are being paid.
Sir, can I give my views, sir?
Yes, Arjun.
Sir, to this specific question, if there is a decision by Madras High Court, sir, in Sunday came, wherein it was filed by the supplier himself that the IGST was erroneously disclosed as CGST and SGST. So the court said that it is just a procedural error and it should, the assessee should be allowed to rectify the same because it is a human error and to err is human. So it should not be a case to deny the credit. So he has to rectify the same, but it is not specifically covered in circular 183 or 193. But if we can get the certificate from the supplier that he has paid the tax correctly, only disclosure in GSTR1 is erroneous. Yes, the credit is entitled, eligible, but I don't think so. By the circular or getting that certificate, the department may allow the credit in adjudication level. It has to be tested in litigation, either in tribunal or in court of law. Because presently revenue neutrality is considered not at all considered by any of the appellate authority or adjudicating authority. The grounds of revenue neutrality is not considered by them, as
Thank you,
per
sir.
my understanding or experience.
So Praveen, just to reiterate the question for the benefit of all, the input tax credit is visible as CGST and SGST in the 2A or 2B. But I believe that it should be place of supply should be my state, in not the state of say Maharashtra. I want to take it as Karnataka, but I cannot take Maharashtra CGST, SGST. I am changing it to IGST credit in my 3B and by claiming credit. Is that the understanding correct?
No.
Okay, because he's talking from the recipient perspective. So, Praveen, if you can put a question, little more. Because he says supplier has IGST was filed as CGST, SGST. So I'm taking Maharashtra should have raised the Karnataka IGST. So he has raised Maharashtra CGST, SGST. Now I being here in Karnataka, I was presuming it to be IGST and I availed input tax credit. Maybe it under C plus S of Karnataka or IGST of Karnataka. In my 3B, I have availed credit, which otherwise was not visible in 2B. I think this is the question only.
Venuji, there might be some network issue with Praveenji. He is
All right. Yeah, I think we'll move on.
Venuji, last one question.
Yes, Nilesh, right.
We have a restriction of a 20%, 10% and 5%, whatever it is. But so before the restriction, can we say there was a no restriction provided in the law and I am eligible to take 100% of the credit, though the circular initial para says otherwise. So can we say in that manner?
Which circular, 183 or 193?
Circular number with respect to 2A matching.
That was permitting, no? Nilesh, that circular permits subject to the confirmation from the supplier saying the taxes were paid and the CA certificate after crossing the threshold limit. There is no restriction of the 20% or any percent. Assuming that nothing is visible in your 2A and you have taken the credit, still you will be entitled to the credit when you get the declaration that the tax is duly paid.
Okay.
Yeah.
Yeah. I would like to add on to this.
One doubt.
Yeah. No, to add to Nilesh's query, Nilesh's query, actually it specifically said in 193 that till 9th October 2019, we can take 100%. Uske baad se this ratio will apply.
Correct.
Yes. What do you want to read?
A very practical doubt on how to go about 183 and 193. Like, let us assume that there is 20%, 10 and 5, and there is some mismatch. And going by circular 123, we have to cut off the calculations from the date of GSTR1, that is 11th, right? So how exactly are we supposed to ensure that it is the 11th cutoff date calculation for 20% that we are going to certify?
Okay, so only to benefit this, though 2B came late now, but the information relating to 2B is visible on the portal. So, like how 2A came 1 year later, but now 2A can be downloaded for July 2017 onwards. I think we should go with the values that are appearing in 2B now, pertaining to those dates, and go with that.
So, circular 123 has to be accepted to be legal, even though there were no restrictions as to date of 11th.
Yeah, I think that is why even the refund circular, they have changed it to make good the 125 good with 2B instead of 2A. So Yeah. We have to.
Uniji, what I would like to add is that we have to consider circular number 123, 183, 193 or 111, whatever will circular number, to the extent they are beneficial for us. Unless until they are beneficial, we can always challenge, and they are subject to challenge.
Yeah.
Because 193 also is going beyond the law. How can you say that if my supplier has paid the tax, I would only allow you an additional rate of 20%, because a rule cannot go beyond the law. And section 16.2 is not subject to rule 36.4. And if at all they say that rule 36.4 is valid, and it has to be read in consonance with 16.2c. The first question is, what is the enabling section for rule 36.4? If it is 16.1, then 16.2 overrides 16.1. So this is how I think that we have to follow the circular till the point they are beneficial, because all the SSC cannot go to litigation, and once they are not beneficial to us, they are always open to challenge.
Yeah, I think till 16.2 AA was brought in. Till that point, the power for 36.4 was not there. So if there is a substantial loss of the input tax credit, and like as Arpit Bhai rightly said, the supplier himself give a declaration that taxes have been paid and it is evident. So where is the question of restricting it to only 20%? And it's up to us when to challenge, where to challenge or not to challenge.
Yeah, but the problem is CS cannot certify and they'll be bound by the circular.
Yes, definitely.
Yeah, I think we can conclude the session today, Arpit.
Yes, Vinipalji, and to all the participants, we would be having a detailed session on ISD and crosstabs. So we have not taken the queries because they are again very detailed queries, and we need to have a detailed in-depth discussion. And for the rest of the circulars, all the queries, most of the queries which have come have been taken, and some of the queries were answered in the chat box itself by Uni Krishnanji. So we are benefited by those replies in the chat box by Uni Krishnanji, although he was not able to join through the vocal mode.
Yeah. So before we conclude, I want to make one closing remarks for the benefit of all of us. This is a voluntary group doing for the benefit of ourselves. Like I'm doing it for my benefit and the benefit of everyone. So between me, Arup, Uni, and Arpit, over the week we are looking at what should be the topic, who should be the speaker, and reaching out the speaker and organizing and setting up this. I would also request all of you voluntarily coming up, taking up one area, and it is more like a mutual discussion. And as we present here, discuss, and I'm sure every speaker would agree that their knowledge has enhanced much more than as a participant when they have presented a paper. Because it also takes a lot of time of Arupji for now coordinating between various speakers, whether they would be available. And we don't even want it to be making as just because before or here we speaking it, we want to moderate it and ensure the smooth function of it. Hence, request each one of you to one or the other week come up and take up some topic, and we will keep managing and putting it into the slots. And Arup, special thanks for that extra efforts. Yeah. So on this note, can we conclude Arpit by anything is there?
I would also like to thank all the participants for their active participation.
That's more important.
Because this was one session wherein we have seen a lot of engagement from the participants, and more engagement of the participants of the group in these sessions will make it more beneficial. And as Vinuji has said that all of us in this group are speakers in their own right, and are taking sessions on various platforms. So nobody needs an invitation. They can voluntarily come and ping anyone, four of us, for being the speakers, and we would be very happy to have such participation from all the members.
And wherever you need mentoring in terms of support of some case laws, everything, definitely you would also get an opportunity to, wherever you have self-doubt, there is a team to support you. All right. So on this note, we can end the session for today. Thank you everyone for your participation.
Thank you.